Karibuni sana to this webinar. We thought it would be a good idea to just talk about the Sacco and it as an avenue for personal financial growth. My name is Dr. Mercy Korir. I'm the Vice Chair of the Sacco, and I also chair our Education Comms Marketing Committee, who's responsible for putting together this webinar. We look forward to a very fruitful engagement with you this evening. We look forward to answering your questions. We look forward to hearing from you, getting your feedback on what the Sacco has been doing, what we can do better, and how we can make life much more smooth and better for you as you journey through life and through looking for financial growth, for financial stability, and for financial well-being. And that's why we thought we should put together this webinar. We have a few of our board members who are part of the webinar, so feel free to engage us. We have also our CEO, Andrew Mutua, and his staff as part of the webinar. So we'll be happy to answer all your queries. If you have individual queries and issues that would be very specific to you and the Sacco, you can let us know and we'll be able to get in touch with you on phone or on email and be able to sort out that issue. So use this also as an opportunity to just address some of the issues that probably you have been wanting to address with us as the Sacco. For all your queries, please put them on the Q&A option of the webinar so that we are able to track and make sure that we answer as many of the questions that you would raise as possible. So please put it on the Q&A option of the chat. During the Q&A, if you would want to ask your question on audio, please raise your hand and our staff will be able to allow you as a panelist so that you are able to ask the question that you have. If you're in an area with a low bandwidth, you don't have to put your video on. We'll be able to get your question on audio. So we really, really look forward to a very fruitful and engaging conversation. So without much further ado, allow me to introduce to you our presenter for the day, that is Esther Masaki. Esther Masaki is our recoveries manager. Previously, she was working as our credit and recoveries manager, but now she's on recoveries. Most of you, if you have taken a loan with the Sacco, you definitely know Esther. If you have been having trouble repaying or challenges, you definitely know Esther. So she will take us through this webinar with her presentation. A reminder again that you put your questions, any queries, on the Q&A option of the webinar. I can see some members are saying the chat is disabled. Yes, because you want your questions on the Q&A option so that you are able to track and we are able to make sure that we answer all the questions or any issues that you may raise during this webinar. Esther is one of our longest serving Sacco employees, and so she knows a lot about the Sacco from when we were just worth a few tens of millions of shillings to now when we are almost a 6 billion asset-based company. And so Esther, the floor is yours. Karibu sana.
Thank you so much, Dr. Mercy, and thank you for this opportunity. As you've been told, my name is Esther Masaki. I have a background in banking and finance and also an MBA in finance. I'm quickly just going to take you through the topic for today. We are looking at Sacco as a catalyst for personal financial growth. To start us off, let's first, 1 minute. To start us off, let's look at the mind of the rich and the wealthy, how the wealthy people actually think and how the rich people think. Wealthy people think of saving a percentage of their income and only spend on the necessary things. And in the long run, their money lasts for a lifetime. The rich people actually spend their money upon receiving it. They live a lavish life and they do not have money in a long run. Those are two different mindsets of the wealthy and the rich. You need to ask yourself, where do you place yourself among the two categories? What is personal finance? Personal finance actually means maintaining your own money throughout your life and beyond. How do you actually do that? You actually do this by looking at your everyday spending. The importance of actually saving each of your savings in order to ensure that you've grown your personal finances. Access to credit. How do you access your credit? Are you the one who accesses credits that are expensive? Or are you the one who normally access credit that are a bit favorable? Do you normally look at how the interest rates for the credit that you're taking, how they vary? These are important matters which you need to look at when you're looking at your personal financial growth. Personal financial growth can be summarized as follows. When you look at your budgeting, setting spending, and savings priority, your cash flow planning, and how efficiently you actually invest your money so that you earn additional wealth. What are the key elements in personal finance? Key elements in personal finance, we look at wealth management. Wealth management generally looks at your personal wealth. How well do you manage your wealth to ensure that you actually get additional wealth? How well do you manage your income to be in a position to actually increase your wealth, personal wealth? And then home and mortgage. Home is a very crucial and important thing in your life, whereby where you stay is very important. Are you staying in a place whereby you're paying rent throughout? Paying rent is expensive, and if you save money on rent and actually stay in your personal home, that way you actually increase your personal wealth. Mortgages are also another avenue where you need to look at when you look at your personal finances. Do you want to get a mortgage for a home you're going to stay, or do you want to actually build the home where you're staying? The importance of building the home where you're staying, actually, you tend to personalize your taste and interest in the home where you're going to live in. That's the importance of constructing your own home and in regards to a mortgage. Credit cards. Credit cards are expensive ventures. When you go out with your friends or when you go and buy something using a credit card, it's expensive. So you need to actually look at how you spend your credit card in order to reduce on the cost implications that comes with you utilizing your credit card, and also have some money set aside so that you can actually grow your finances. Insurance. How well have you insured yourself, your family, or your business? It's also crucial. Health sometimes can be very costly in terms of, especially as you age, you tend to be a little bit unwell. If you've not insured yourself against such kind of insurance, then it becomes costly in that you'll find yourself actually accessing very expensive credit for purposes of actually medical insurance. So it's important for you to actually get insurance so that you minimize the risk and cost implications that will come as a result of you accessing medical need. Also, on the other hand, in your line of business where you work with patients, it's important for you to insure yourself as well, so that at least it protects you against any eventuality whereby somebody is actually suing you to the extent that maybe you do not have money to actually pay for it. Insurance comes handy in matters like that, and that way you actually reduce on the cost effect as well as you manage your finances efficiently. Investment here, we look at investment. When you have sources of income, you need to actually put money aside for investment. Investment can be either in stock market, real estate, money market, or something that actually earns you an additional income of your wealth. Estate planning. Estate planning here, we look at, have you ever thought what will happen to you when you've passed on? how your assets are going to be distributed. Have you ever thought about checking your account with us here in the Sacco to the extent that you actually know who exactly is your next of kin? We've had instances whereby we've had challenges actually paying to the next of kin because there's a dispute in the family. So such kind of things, it's important for you to personally actually make sure you've actually arranged it properly so that in case something happens to you, we do not have any issues whereby we have to send your family back to the legal process for us to actually remit any benefits that you will get from us. Risk management. Risk management actually involves you taking risk. When you take a risk, you actually earn from the risk that you're taking. When you don't take a risk, you don't actually earn. Risk sometimes earns you more, sometimes it can actually bring you down. So the risks that you take in your personal financial growth or in your income, it's important for you to actually manage it efficiently and effectively so that at least you enhance your personal growth. Taxes, as you're well aware, taxes are mandatory and these are payment to the government. How well do you know our tax regimes? How well do you know exactly what the regulations around the taxes? How well can you work around our tax regime in order to ensure that you save money aside for important issues? Retirement is also a crucial thing. Have you ever thought about what will happen to you when you retire? Which kind of life are you going to live when you retire? What will be your source of income when you retire? These are very crucial matters which you're supposed to actually think about in order for you to plan efficiently of how to arrange your finances so that at least you increase, at the time of retirement, you have a smooth retirement whereby you don't need to be begging people for money when you retire, or you take up loan facilities at the time of retirement and you do not have sources of actually paying for those facilities. Budgeting also, budgeting actually involves in you arranging your finances and your day-to-day spending. Budget and look at whatever is urgent first, and then you finish up with whatever is urgent, then you go to other matters which are not urgent. Social security, here we look at your social well-being. You look at your social health. Are you protecting your household and everything in order for them to access proper health care? And also, is your household actually protected? These are important. And you know also the regulations around the social security, whereby if you do not only rely on your employer to save money for you, you can also, you as an individual, set up a fund, a social security fund for your own self for purposes of future spending. When you look at loan and debt, are you the kind of person who actually just takes up loan facility or debt facilities that you've not planned for? It's important for you to take up a debt facility, place it in an investment or a property that can actually generate income for you to actually pay the debt, as well as it increases your sources of income. How you manage your personal finance. First of all, I've talked about budgeting. You need to properly budget your finances properly in order to ensure that whatever you're spending your money on is urgent first, then you save aside money for future. You need to also plan, track, report any cost, and then you analyze. That is how to manage your personal finance. When you look at how money circulates, when you have income, when you start employment and you have income, it's important for you to save. Saving here can be avenues like, for example, a Sacco, whereby you can actually access a loan or a credit facility for purposes of investment. And when you're placing an investment, it's important for you to place an investment that actually generates additional income, so that from that additional income, you also have additional money for you to save. That is how money circulates. The 5 key areas in personal finance here I've talked about is income. Income is the foundation of personal finance. Here we look at your personal income. Here it looks at your personal income and your day-to-day cash flow. It includes your salary, pension, social income, and income from rental properties. Spending. Here we look at your day-to-day spending and expenses. Are you the kind of person who actually doesn't spend whatever you get from your income, you actually spend all of it? Are you the person who actually controls your spending and also saves money aside so that at least you have something aside for you to invest somewhere where you can actually increase your income? It's important for you to control your expenditure. Only spend on the key matters that are urgent, then you partly save the money for future. Savings include money that you set aside. When you save money, it's important to save it in an account that you don't actually access it on a day-to-day basis. Don't save it in a bank account whereby you have access to it either in your phone or you have access to it through your ATM. When you save money, for example, in a Sacco, you can actually borrow against it. When you borrow against it, you actually utilize that money for important purposes that can actually increase your income. Investment. Investment is whereby you as an individual, you purchase from the savings that you've saved, you purchase either money market. Money market right now earns you 9.5 on a daily basis. This is something that you can actually save and actually get additional income. Real estate, as it's well tested that when you place your money in real estate, definitely it's going to increase. For example, if you bought a piece of land like 2-3 years back, the current value for that piece of land is different. So when you put money in real estate, you can actually get additional income. At the time of selling, you sell it even double or 3 times whatever you had initially put. There's the government bonds and T-bills. Protection. Protection here we look at protecting the assets that you own, including your own life. How well have you protected your assets? Have you insured the assets that you own? Have you insured your life or the life of your loved ones? This is a very important matter which if you as an individual are able to set that, it will enable you reduce the costs that come about in terms of medical, the costs that come about in terms of lawsuits that might occur due to issues relating to either your work environment or issues relating to any kind of activity that you take. The financial roadmap. When you earn your income, sometimes this income, you may not be having the kind of job that you want initially at the start of your employment. Here, when you earn income, you take some risks, and these risks sometimes pay off. The risk that you can take when you earn income initially, first of all, is maybe you take up loan facilities for purposes of actually generating more income for yourself, or maybe you take up loan facilities to meet the urgent needs that you have. As you continue working and you earn extra income, it's important for you to actually try and pay off those debts that you have, so that at least your money is freed for purposes of actually setting it aside for purposes of future development or for purposes of an emergency. It's important for you as an individual to set up an emergency fund. The emergency fund here should be at least 6 to 12 months worth of your expenses. Have you ever looked at your expenses on a 6 months or 12-month basis? It's important for you to set up money aside so that at least in case something happens to you, for example, have you ever thought about it that one day you may lose your job, or one day your practice may not be doing very well? How are you going to survive in order for you to actually meet your day-to-day expenses? These are very important matters for you to look at so that at least you do not struggle in life, especially when you lose your job or when maybe your practice is not doing well. It's important for you to have that fund aside that can assist you in case of any emergency. The other emergencies that we have is the medical emergencies. Maybe you've not insured yourself enough for you to cater for any medical need, because insurances, there are limits to what actually they can insure. Suppose you set up aside an emergency fund whereby you can actually access it for any emergency need, like medical needs, either medical needs for yourself or your family or anybody close to you. It's important at least you have that fund aside that can actually assist you. Creating a budget. Priority when creating a budget, you prioritize on your expenses. As I've talked about it before. Prioritizing your expenses you look at your urgent needs. There are those needs that you want urgently. There are those needs which can actually wait for some time. Budget yourself properly so that and you can also meet the expenses that you have, and also set money aside for savings and for investment in order for you to increase your personal finances, increase you do something aside in order for us to actually get additional income. When you depend on only one source of income, either your salary or your place of work, your business, that is too risky for you. Such kind of either your salary one day will come to an end, your business may not be doing well one time, then you find yourself going down because you're not able to meet your day-to-day expenses. It's important for you to actually have something aside whereby you can actually look at you can actually get money aside. Side hustle can be anything. You can even be doing farming. You can even be cooking something and selling. Public speaking these days also earns a lot of money. When you speak in public, you get additional income. If you have the passion to speak to people, or if you have the passion of actually telling people about your profession or something, that way you earn additional income. Look for ways in which you can actually do a side hustle for you to actually earn additional income for you to be able to grow your personal finances. When you do that, you also do investment. It's important for you to invest whatever additional income that you get, you put it in investment. Here, it's just simply somebody sitting down and doing budgeting for his day-to-day expenses. Everyone, at least at one point in time, every month you pay for your phone or airtime. There is important things like food, rent. If you're not paying rent, maybe you're paying for electricity bill, water bills. These are expensive day-to-day bills that one has to pay for. There's the medical care, there's the education for your children. These are very important things. So when you're budgeting, it's important for you at least set money aside that can actually assist you in case of any emergency. How do you set up your personal financial goal? You need to create a financial goal for yourself. How do you do that? When creating a financial goal for yourself, you need to ask yourself some various questions. One, how much money do I want to make, and when do I want to make this kind of money? Do I want to be a billionaire in 6 months? If I want to be a billionaire in 6 months, then I need to ask myself, how am I going to be a billionaire in 6 months? What are the things that I'm supposed to do for me to actually make that 1 million, 2 million, 3 million, or a billion in the time limits that I've set for myself? That is how you create your personal financial goal. The other question you need to ask yourself is, how much money do I want to retire with? How much money you retire with actually ensures that you maintain the current lifestyle that you live in. If you're not able to actually, whatever income that you get right now, if you're not able to actually get the same kind of income when you retire, then you'll find that you're struggling a bit at the time of retirement, whereby you're not actually able to meet your current needs. Whereby you live a certain kind of lifestyle. When you retire and you do not have the employment income, for example, you need to have additional sources of income. If you had set money aside in your money market, or if you had set aside money in the Sacco, for example, and you get additional money from different sources of income, like your rental income, that actually ensures that you maintain the kind of lifestyle that you live in, so that at least you're able not to struggle at the time of retirement. The other key question you need to ask yourself, when do I want to retire? How soon do I want to retire? Do I want to retire in 5 years, 10 years? With the time limits on when you want actually to retire, then you need to plan yourself accordingly so that at least you meet up your goals, so that the retirement period actually is smooth for you. The other key questions you need to ask yourself, for those who have children like me who are still going to school, you need to ask yourself, which school do I want my child to go to? Which college do I want my child to go to? Which kind of lifestyle do I want my child to go through while in school? These are very important matters that you need to ask yourself. Do I want my child to go to school abroad? School, when you're taking a child to school abroad, it's also an expense. It's expensive for you to actually pay for education abroad. So how are you going to meet that need of taking your child to school? These are key questions you need to ask yourself, so that you set money aside, so that when that time comes, you don't need to actually take a credit facility for such kind of a matter. You just remove it from the fund that you set aside and you take your child to school. The other key questions you need to ask yourself, at what age do you want to buy your house? For those who are still young and buying houses. You also need to ask yourself, do I want to buy my own house, or that has already been constructed, or do I want to first buy a piece of land, then I construct slowly? The importance of you asking yourself this question is so that when you have money, you are able to actually look at how best for you to meet that kind of need. And also create actionable steps whereby with time limits. So when you create actionable steps, you're able to look at your steps and how best you have achieved that kind of step. After you've actually created your financial goals, you need to assess your financial goals. Assessing, you need to have time limits when you need to assess these financial goals that you have set. The financial goals that you have set need to be smart. At the same time, they also need to have time limits on when you're supposed to achieve those financial goals. When you assessment also, you need to have time limits when you're assessing your goals. Am I going to assess whatever I'd set for myself within 6 months or 12 months? Assessing makes you at least make some adjustment either to your budget, because if you've not been able to meet a certain goal that you've set for yourself to achieve in 6 months, then you will adjust your budget in such a manner that you're able to meet those goals that you had set for yourself to meet in 6 months. You also need to plan yourself, monitor, execute, and also repeat the assessment every now and then, so that you keep yourself in track. You also need to track your net worth. List down all the assets that you own. List down exactly what you need to additional assets that you need. And also keep an eye on this to enable that you actually, your assets are not tampered with. Very often we normally don't look at our assets. Sometimes we can buy a piece of land somewhere and then we go away. It's important at least for us to be able to know these assets that I have bought. Where are they? Are they in good condition? This is important for you to track your net worth, and as well as you also need these assets that you own. Who is my next of kin? If something happens to me, how well can my next of kin actually access these assets so that your next of kin do not actually struggle? Why choose Sacco in your personal financial growth? Sacco is abbreviated as Savings and Credit Cooperative Society. It's an association of like-minded individuals registered under the Ministry of Cooperatives. And their mandate is just to receive deposits and lend to its members. Saccos are governed by bylaws. These bylaws are set by the members themselves. They actually set the objectives in which the organization is supposed to meet, the membership which is acceptable, the share capital, organization structure, and the lending regulations. When we look at the Sacco model, the member and the customer are the same. When a member places savings in a Sacco, they get loans against their savings. When a member places his savings in a Sacco, they get loans against their savings. When they get loans against their savings, the Sacco charges them interest. Thus, the interest that the Sacco received from the loans that the members have taken is returned back to them in terms of dividend and interest on deposit. So when you see like this, the member still gets whatever income that has been generated by the Sacco, the member still gets it in return at the end of the year. The bank model is different. The investor may not be the customer of the bank. The investor is just somebody investing in a bank for personal reasons. The customer of the bank actually gets a loan from the bank. They are charged several bank charges together with interest. But the dividends that are declared at the end of the year, they don't go to the customer, they go to the investor who had invested in the bank. That's the difference between the Sacco model and the bank model. What's the difference between the Sacco model and the bank model? The Sacco model, at least the interest rate that the members are charged is lower as compared to the banks. As you're well aware, currently the economy is not doing well, and the banks rely on the interest rate that has been sent by central bank for them to set their lending rates. So the Sacco interest rate do not vary, but bank interest rate vary a lot. And in the near future, we're going to see changes in the interest rate that are going to affect most of you who are taking loans in the bank. Please feel free to come and talk to us so that at least we look for ways in which we can actually turn around that difficult bank loan that you have, or a mortgage from the bank that you have, so that at least we can turn it around so that at least you pay it at a favorable rate, and at the same time you have something you can actually save from the cost that you're getting at the bank. Hidden charges. In the Sacco, we do not have hidden charges. When you take up a loan facility with us, the only thing that you need to do is ensure that loan that you're being given. Banks, they charge additional fees like the processing fee, legal fees. If you clear your loan quickly, they actually charge you for that. So Saccos are more flexible than the banks. Flexible in terms of when you look at loan security. For a Sacco, we lend you against your deposits. Or when you lend you against your deposits, you can either look for a guarantor or provide as a collateral so that at least we are able to give you the loan facility. For banks, they look at your payslip, or if you have a business, they actually look at the cash flow which comes in from your business. That's where they lend you against. They also categorize you whereby if you're a risky person, there's a limit to how much they can actually lend to you. The loan amount that you can actually access. For a Sacco, the loan amount that you can access is a multiplier of your contributions. The banks, the loan you can access it depends. It varies on your cash flow, your payslip, or whatever risk you're actually taking at the time of taking the loan facility. In the Sacco, you can access multiple loans. As long as you're able to prove your ability to pay, you can actually access multiple loans that are secured, either with your deposit or with any kind of collateral that you have. In the Sacco, we have flexible repayment period. In that, for example, in KMA Sacco, we can give you a loan up to 96 months, depending on the amount of money that you're taking. So this is the flexible repayment period. And if you have a specific need, if you reach out to us, also we can also look at your needs and be able to assist you on a case-to-case basis. For the bank, the repayment period is normally defined based on the loan which you're taking. What are the benefits of investing in a Sacco? One, when you invest in a Sacco, it helps you create a saving culture. Most of us, when you have money in the bank, we just get it out, spend it, whatever need that we get. Now, when you save money in the Sacco, it helps you create that saving culture. That saving culture actually helps you to earn additional income at the end of the year. In the Sacco, you earn interest and dividends on income from your deposit or shares at the end of the year. Borrowing using your deposits, and also your deposit, you can get loans as a multiplier of your deposit. We also offer affordable interest rate as compared to banks, and our interest rates do not vary, as I've spoken before, and also insurance on loans. When you take a loan with us, the loan is insured. If something happens to you, then your family will be given your deposits as your deposits times 2. The entire loan, despite the amount of money that you are taking with us, 10 million, 20 million, 40 million, the bank will actually clear the entire loan and your family will be given your deposits ×2. We also offered affordable insurance premium to members, either medical, we have a group medical cover that you look at, that you cannot, the rate actually is different from you as an individual actually going to the insurance department, insurance companies to access it. Regulators in the financial sector, we have the Central Bank, SASRA, RBA, IRA, Commission of Cooperative, and the Capital Markets Authority. Why invest in KMA Sacco? We have a financial cure for doctors. As you cure us of our health matters, we also cure your financial need. We look at your financial need when you approach to us, and we also advise you accordingly of how best your financial needs can actually be met, or the different things, different approaches you can approach to a matter so that at least you're able to meet the need that you have. Who are we? We are one-stop financial partner for doctors, their spouses, employees, with a variety of innovative financial solutions. We take care of most of your finances. Our journey so far, we started in 1998. That's when we were registered. And in 2001, we registered our first audited financial statements. We bought this office that we have at KMA Center in Upper Hill in 2001. Our membership currently, as at the end of December, we're at 6,651 members. Our members, we draw our membership from doctors, pharmacists, and dentists, spouses of doctors, children of doctors, medical students, employees, to principal member who are doctors, and corporates. We also offer diversified loan products. We have the development loan, flexi development loan, emergency loan, asset financing, equity release, school fees, insurance, intern loan, home loan, dividend advance loan. Development loan. This is our core product whereby we give you 3 times your Sacco deposit at 1% per month. The repayment period depends on the amount of money which you take, and it varies from 5 years to 96 months, depending on the amount of money that you take. How do you apply for a development loan? The deposits that you have, for example, if you have 1 million, you can apply for 3 million. The 2 million difference, you can actually secure it either with guarantors or collateral. If you do not want to look for guarantors, you can provide us with a security that's written under your name for purposes of securing that loan, and you get access to it. Emergency loan is, we give you 2 times your Sacco deposit to a maximum of $1 million, but you pay it within 12 months. The interest rate for that is at 1% per month. Emergency loan is designed for day-to-day emergency needs of our client. The school fees loan simply is just for school fees purposes, whereby you need to provide us with your fee structure. Based on your fee structure, we are going to lend you, and the repayment period is within 24 months. Flexi development loan. For flexi development loan, we offer you 4 times Sacco deposit. The interest rate is at 1.125 per month, and it's amortized on a monthly basis. And as I've stated, it's like a development loan whereby the repayment period varies depending on the amount of money which you're applying, but the maximum repayment period for all loans that are 0 to 6 million, you pay it within 5 years. Any loan above 6 million, you can negotiate the payment terms based on the amount of money which you're taking. Equity release loan. When you own a property that is under your name, you can use that property as a security to actually take a loan facility. We lend you against the value of the collateral. We will retain the collateral here with us until you complete paying the loan. So the lending here is based on the value for the collateral. For car loan, we give you 3 times the member deposit to a maximum of $1 million. For new cars, we give to you at 5 million, and then for used cars, we give to you at 2.5 million. Repayment period is 36 months, and the interest rate is at 14%. For asset financing, when you want to buy that machine that you want for your hospital, or any kind of asset that you want to purchase, either machine, land is also an asset, or any kind of asset that you want to purchase, you first value the asset. you will pay a third, and then we will finance you the 2/3 of the 2/3 based on the agreement that you've had with the seller. Home loan, these are mortgage facilities which we build up for clients to actually access homes. We give you 5 times your Sacco deposit, and the repayment period is 20 years, depending with your age limit and 65. So if you're young, you can be able to pay this mortgage comfortably within 20 years, and it's not very expensive for you. The home also will be insured through our agencies so that it's secure. Any emergency, you can actually be compensated against that. Insurance loan is basically for your insurance need. For that kind of insurance that you need, if you do not have money for it, you can actually apply for an insurance loan for it. The interest rate is at 1.1 per month, and the repayment period is 10 months. That medical insurance that you need, you can actually approach us if you're unable to actually pay for it, so that at least we are able to give you money to pay for you so that you're insured against the need that you want. Intern loan facility, it's designed for those people who have just completed school and are going for internship. The maximum currently is at 100,000. You to pay it within 9 months. What are the investment opportunities that we offer to you? We offer you various kind of investment opportunities that we have. One, deposit, whereby we give you at 6.5. If you invest money with us in fixed deposit, give you at 6.5%. The minimum amount of money you can invest with us in a fixed deposit is 50,000. We also offer money market or wealth management through our partners. Money market is whereby you can actually place money through our partners so that at least you get additional income. Currently, money market, as I've stated before, it actually gives you between 9 and 9.5%, depending with the company which you place money on. And it's very easy for you. You can actually, even with 2,500 shillings, open a money market account and actually be saving money even daily, or money you can actually save on a weekly basis. When you save money even daily, it earns you income on a daily basis. So it's important for you to actually set money aside for money market. You'll actually see greater returns for it. The other investment opportunities that we offer land. We normally buy land from different areas. We actually sell to our client. So far, we've done 5 phases. We have done 2 phases in Gong, Kitengela, Moa Hills, and Kangundo. All projects have been closed with a few remaining in Moa Hills and Kangundo. We have an insurance agency, TIBA, that offers insurance, your insurance needs. The various insurance needs that we offer to you is professional indemnity. You know, as doctors, this is very important for you when your line of business, so that you need to protect yourself against any lawsuit that any person can set aside for you because of your day-to-day work profession. We have the medical insurance. We have various medical insurance companies that we deal with. The medical insurance that is due for renewal in June, UAP medical insurance. So in case you have need to join that, please visit our offices in June so that we can be able to give you that information, or you can actually send us an email. We can give you those details so that you are able to look at that. Motor insurance is insurance against the cars that you drive. We have personal accident cover, domestic package, life assurance, WIBA, clinical insurance, travel insurance. When you want to travel for holiday, or it's very easy. If you already have a medical insurance with us, you don't need to pay again for a travel insurance. You just need to give us details of travel, and within less than 2 or 3 hours, we'll give you the travel insurance through your email so that you can be able to use it to travel, or for you to access traveling documents for you to travel. Deposit for life, all risk insurance, money market, and wealth management. As I've talked before, the UAP medical insurance is due for renewal in June. If you have not insured yourself against any medical, the importance of taking a medical insurance with us, especially with UAP, one, there's no waiting period. For those people who want to access either the maternity or any kind of package, there's no waiting period. Just visit us, we shall give you details for that so that you're able to actually access that medical need that you need in a short while. I've talked about professional indemnity. We can give you professional indemnity for as low as 6,413. This is a need that we've negotiated with our various partners that offers professional indemnity cover, so that you can be able to access that as you do your business in your line of duty. What are the benefits of KMA Sacco membership? I've talked about the investment opportunities that we offer to you. We also embrace the saving culture for our clients. We insure our deposits. All deposits that you've saved with us are insured. In case something happens to you, we'll return your deposits ×2 to your next of kin. As I've insisted before, it's important for you to check your contacts with us so that you check your details with us. Who is your next of kin? That is very important for us, so that at least when that need arises, we do not have issues when it comes to payment to your next of kin. We also offer attractive dividend and interest on member deposits savings at the end of the year. We offer diverse loan products, and depending on the need that you have, if you approach us, you can be able to look at your need and also align your need based on the products that we have, so that we're able to meet your current need. We also offer attractive and competitive insurance packages compared to what is being offered in the market. KMA Sacco membership, I've talked about the benefits, I've talked about the investment opportunities, the diverse products that we have, the attractive interest rates that we offer, the attractive insurance packages that we offer to our client. We also embrace the saving culture of our client, attractive returns on investment and dividends on member savings. KMA Sacco, I've talked about the attractive interest that we offer to our clients. We also offer customized loan products that meet our members' needs. Members are given loan up to maximum of 5 times their deposit. All sources of income are considered at the time of appraisal of a loan. We consider both your bank statement, your payslip. If you're able to meet the loan repayment that you applied for, then we do not have a problem in actually lending it to you. The real scenarios, for example, if you have a deposit of 3 million with us and the loan balance is at 7.2, and your monthly savings is at 10,075 per month, the interest paid is 832,860. The dividends that we paid you in 2022, if you had a deposit of 3 million, we paid you 245. The loan interest is at 12%. That means 30% on interest paid was returned to you back, the borrower back. That is a forced savings of around 120,907.2 in a year. How to join? Joining the Sacco is very easy. You just need your ID, KRA PIN, and 2 passport size photographs, email indemnity, either your posting letter or your arrival letter duly signed by the superintendent, your recommendation letter from the dean in case you are an intern, and also your practicing certificate, and a minimum fee of 3,000 shillings, you're able to join membership. We've been able to open various bank accounts so that we can make it easy for you, our clients, to actually make payments to us, either your savings or payment for your loan. So you can make payment to any of those bank accounts, and you'll be in a position to update it accordingly as per your instructions. You can reach us out through the various channels stated there, and in case of any need, you can actually call us directly so that we can be able to address the need that you have. Thank you so much.
Thank you. Thank you very much. Thank you very much, Esther, for running us through personal finance and what the Sacco has. And there have been many questions that have been coming on the Q&A. I can see Dr. Rita has really tried to answer some of them, but we will be fronting some of those questions to you. So thank you very much, Esther, for taking us through that. Now, for members who would want to ask their questions live during this webinar, please raise your hand, and our staff at the office are on standby, and they'll be able to allow you to ask your question on audio, but otherwise we'll start with the questions that we have on Q&A. Some that have been answered, we'll also just ask them so that we just emphasize on some of the answers that are there. So please raise your hand and you can put some of the questions on your Q&A. Some of our board members will also be able to answer those questions. So the first question, Esther, is why is our Sacco not offering finance mortgage form to build homes?
I can take that one up, or
yes. Yeah, you can take it up. Okay.
It's not that we are not offering mortgages for you to construct. If you have any other property which you can actually provide us as collateral for us to be in a position to actually lend you the money that you need, then we can use your other collateral sources so that we can be able to meet the need that you have in constructing the hospital that you need or the home that you need.
Okay, thank you. Ruth is asking if it's possible to get a recording of this webinar. Yes, at the end of the webinar, we usually share a link of the entire recording so that you may have it, you may have access to it. So we'll be able to share that tomorrow or in the course of the week. So thank you for that. Esther, why does the Sacco charge you some fee if you top up an existing loan?
When you top up your loan, we charge you 2.5% commission on the loan balance that you've applied. This money is specifically for insurance. It's not money that we use it ourselves. We insure that loan that you've applied so that in case of an eventuality, we are able to, the insurance is able to reimburse the money that we had lent out to you. And we are able to remit whatever you had saved back to your next of kin.
Okay, I hope that is satisfactory. There's a member here asking if there are CPD points. Yes, this is CPD accredited. You'll get 3 points at the end of this webinar. Esther Karen is asking, are there instances when renting is better than home ownership? And how can credit cards be leveraged as a tool for managing your finances?
Okay. The difference between you owning a home and paying rent, for example, if you live in Nairobi, maybe you're paying rent of 20,000 to 30,000 to 40,000 to 100,000. At the end of the year, if you multiply that, that is money that's sufficient for you to actually buy that piece of land somewhere and start constructing from scratch. You can even construct a very simple house with almost 1 billion shillings, and you start from somewhere small, and you're able to actually save that money for rent and use that money for something different. When you live in your own home, you're saving that rent money. You're in a position to actually save for a while, invest it in other avenues like the money market that I've talked about, where you earn additional income from that savings from the rent. The other question that you asked, apologies.
How can you leverage credit cards as a tool of managing finances?
How you can leverage the credit card is you minimize your spending with the credit cards. If you're able to pay for whatever need that you have, you either pay cash or something, you're able to minimize the interest that you're charged from the credit card. Sometimes is exorbitant by the banks. So you need to actually look for ways in which you can actually pay that either through cash or when you try as much as possible to minimize your spending through the credit card so that at least you can actually reduce on that interest that you give to the bank on a monthly basis on the credit card.
Okay, thank you. Now, I'm seeing a few questions on mortgage. Let me combine them There was one question about what is the age limit of the mortgage of the home loan. I think it's been answered. I think basically what you can do, Esther, you can just do a recap of the home loan. What is the age limit? I think the other question was, what is the maximum limit? And the issue about building, loan for building versus the home loan that we give now for already constructed. So I think you can just do a recap on the home loan.
Okay. As for home loan facility, we give you 5 times your Sacco deposit with a repayment period of 20 years. The interest rate is at 13% per annum. The age limit is at 65. So depending with your age and 65, you can take up the mortgage depending with the difference between your current age and the age limit of 65. The importance, the difference between a construction loan and a home loan, we look at, for home loan, we prefer to give you an already constructed property for purposes of securing that loan and giving it to you quickly. When constructing, we can give you actually, in case you have any other additional properties that you can actually give to us for purposes of us valuing it, so that at least we can give it to you and you're able to construct your home, then that is possible for us to meet that one.
Okay. Still on property, there was a question about can you use, say, property that has been acquired through the Sacco as collateral, and is there need to do valuation? So say maybe somebody bought one of the Medifinance plots, for example.
Yes, when we've already given you the property and the property is under your name, it's important for you to do a valuation for the property at the time of loan application. This is for purposes of us ascertaining just the value of that piece of land currently, because maybe you bought that piece of land at, for example, in Moore Hills, we sold that land at 998,000 Kenya shillings. When you come for a loan facility right now, maybe the value for that land has gone up. It can be 3.5, and you want 3 million. You see, depending with the current value for that piece of land that we had given to you some years back, we can lend you against that current value of that piece of land. That's the purpose of why we request you to actually do a valuation of that property.
Okay. Then is there a benefit of increasing your shares in the Sacco, and how do you go about this? Combine that with how we calculate our dividends. The question verbatim is, why don't KMA Sacco calculate dividends based on total savings rather than an average deposit per month? So I think you can do a clarification on how we do the dividend calculations. So increasing shares and how we do the dividends.
Okay. The current minimum share capital requirement is at 30,000. You can increase that from 30,000 to 100,000. That is optional. Share capital, you actually earn more on it at the end of the year. Last year, we gave it to you at 20%, depending on your share capital as at that time. And we gave you 8% of your deposit. So share capital, you actually earn more returns at the end of the year, depending with our performance for the year. The dividends, the reason why we calculate it on a monthly basis is that when you have more money at the end of at the start of the year, we've traded with your money for a certain duration of time. For example, if you have $1 million in January and there's somebody else who has $1 million in December, this person who has $1 million in December does not deserve to earn the same rate of interest as the one who had $1 million in January. Definitely the $1 million in January has actually traded in the Sacco for a number of months. And when we trade with your money for a number of months, we're supposed to give you a return based on the duration in which you've been holding your money. That's the reason why we actually prorate it on a monthly basis, so that at least whatever you've given to us on a monthly basis, you actually get a return to it based on the different of months that you've actually placed that money.
Okay. Thank you for that. Okay, I see no hands up. There's a member who's addressing something about the standing order not reflecting in the statement. I think, please, because it shows as anonymous attendee, we are not able to address that. Kindly just drop us an email at customercare@KMA Sacco, and the team, it's shown there, the team will be able to attend to your specific query and find out what the issue could be, with a reconciliation or where the gap is. So kindly drop an email to customercare@kmasacco.com, because here it's showing anonymous, so they're not able to pick that up, and then they'll be able to specifically address that for you. Esther, this other question, there seem to be very stringent measures for the senior members. What are you doing to make it possible for senior members with improved lifestyle? All of us could be heading there. I think this was related to, is it the mortgage or the insurances? I don't know what was this in relation to. And that for doctors, as they age, they make more resources because consultancy starts late. I think this was probably in relation to the mortgage issues and the insurances. You can just touch on that.
Okay. For the senior citizen, if you're able to prove your cash flow for us and provide us with additional statements or your additional sources of income, depending on the additional sources of income, we've always reached out to you and advised you accordingly on the limits which you can borrow. In case you want to access a home as well, an additional home, we've always given you direction on how to approach that one, so that at least you can be able to meet that one out. One, you can actually take an asset financing loan, or you can actually use another property that you have to actually access money for you to be in a position to actually get that other asset that you intend to get. And also what matters is actually your cash flow that we're able to analyze from the various statements that you give to us, and proof of ability to pay.
Okay, thank you. This question has shown up several times about bonds and treasury bills. Why are bonds not allowed as security in the Sacco? Esther?
The reason why bonds are not allowed as securities in the Sacco, bonds, you have access to it. It's not us who have access to it. One, when you have money with us in fixed deposit, that is money that we have control over. We do not have control over the bond that you set you as an individual with the government. That you are the one who takes control of that. So we are not able to take that as a security for the loan, because you can access it anytime in person. But when you have a fixed deposit with us and we have control over that fixed deposit, we're able to manage it and control it in such a manner that once you've settled your loan is when we return it back to you. We do not have control in the payment process for the central bank on how they can actually pay it to you.
Okay, thank you. Dan, you're asking when we will resume land projects in Ngong. We're in the process of scouting a few potential properties around that area. Once, because we do a thorough process, we do due diligence, because we don't want to float a project that will land the Sacco and members in trouble. So we are still looking around, and we ask members if there's any property, any land project anywhere in the country where you think it would be of interest to doctors, you can reach out to us at info@KMA Sacco, or any of the numbers, and tell us this and this is happening, or put us in touch with whoever is selling. Then the Sacco is able to follow that up, do proper diligence, valuation, survey, and all of those things. And then we are able to float the property to the rest of the membership. So we are looking, and we are always actively looking for any leads, and just making sure that it's clean land that we are giving to the Sacco. And its membership. Esther, can you withdraw the savings or deposit at any point at the Sacco?
withdrawal of your savings or deposit, you need to withdraw your membership. We do not allow partial withdrawal. That's not allowed by law. So when you want to access your Sacco deposit, you'll be required to fill a membership withdrawal form. And as per the law, you're supposed to be paid within 60 days of presenting your notice. Then your deposit is refunded back to you.
Okay. Can the Sacco give me a mortgage to buy a plot in an urban area, Nairobi?
We can give you an asset financing because that is not land that you already own. We can give you an asset financing to purchase a land in an urban area in Nairobi.
Okay. Yeah, I think we have tackled most of the questions. On the issue of land, somebody is asking about Nyanza. As I said, if there's property that you think we can look at, please let us know so that we are able to follow that up with the sellers and we do our proper due diligence so that we are able to float to members. So we are open and we ask members to support us as much as possible. An anonymous attendee is asking which corporates can join the Sacco. As long as one of the directors in the corporate is doctor member of the Sacco, then they are eligible to be introduced as a corporate member to the Sacco. So as long as you're a member and you're a director at that corporate, then you're able to do that. And the advantage and that what we have seen is when you're able to introduce your employees, then they are able to now even be members of the Sacco as members by introduction, and they're able to run their own finances. You're able to help your employees manage their own finances. Esther, the last question I'll ask is about dividends. Why did we do 8% yet others like New 40s issued 12%?
Okay. This was discussed during the AGM and proper explanation given of the reason why we gave 8%. There is the regulation and we had to meet various regulation needs. That's the reason why we gave 8% of deposit and 20% of your share capital.
Okay. Nalika, you're asking about withdrawable deposit account. Yes, you can transfer to the fixed deposit. Just send an email to customercare@kmasacco.com with those instructions. The fixed deposit currently earns at 6.5% per year. And there you can put it for whatever duration of time that you think is favorable. So I think just send us an email to customercare@kmasacco.com, and then the staff at the office are able to effect that instruction for you, and so that your money is able to earn you something within the year. Is it possible for me to transfer a mortgage from a bank to the Sacco, Esther?
That's very simple. Just visit us with your current balance. We'll be able to look at your account statement here with us and provide you with clear direction of how we can actually do that. We've done that for various people. We give you a financial advice on how best to approach that so that at least you're able to clear it in the shortest time possible. Some of you have reached us because some of their mortgages have, the interests have been increased between last month and this month. The same is going to be increased. Please visit our offices with your current balance so that at least we look at your account and how best we can approach it so that at least that mortgage can be transferred with us and you will be able to see that reduce as quickly as possible so that at least you own that home in the shortest time possible so that it's not tied to any loan.
Okay. Gitao is asking, okay, I think this Esther, I'll ask you to just repeat these, the last three questions. Where do we save emergency funds where it's not accessible? You can recap on that. Can you get an additional development loan when you already have one? Does the withdrawable deposit earn interest?
Okay.
I think you can pick all of that, and then now we'll wrap up with the questions from there.
For emergency fund, you can set up in either in any bank facility that you can actually not access it. There, you can set it up in a separate bank where you cannot access it. you can also put this money in the money market. When you put it in the money market, it actually earns you more. So, and in money market, set it aside in such a manner that you'll not be looking at it. You'll not be thinking that, oh, I have 500, 300,000, 1 million that are placed in money market, which I can actually access it quickly. No, just place it aside. Always send money to it on a regular basis, so that at least it's something that you've set up aside. Whenever you need it, you can actually access it. The law currently does not allow us to hold a withdrawable savings account. You can actually transfer whatever you have in a fixed deposit account, whereby it has a fixed term, where we can actually do it either 3 months, 6 months, 1 year. And whenever that time lapses, you can either renew it or request for it to be paid back to you. I think I've answered. Have I forgotten one?
If somebody has a development loan.
Okay. If you have a development loan, you can get an additional development loan. How do you approach this? First, you need to pay a third of the loan that we advanced you. Then, once you've paid a third, you can do what we call a development loan refinance, whereby, depending with your deposit, we take 3 times your deposit, and then we'll offset the loan that you have and give you the difference. That is one way. The other way is when you have a development loan and you've been paying it for some time, you can actually access a mid-term development loan, whereby you pay it within 36 months. That we look at your deposit times 3, and whatever deposit is available, that's what we give you in terms of mid-term development loan, but you pay it within 36 months.
Okay. I think we will wrap it there. Thank you. I think we've answered most of the questions on the Q&A and also here live. Unless there is any other burning question, I'd like to end the webinar there. I cannot see our chairman, so I think Dr. Gott, I'll ask you to say a word in closing. Dr. George Gott is our honorary treasurer at the Sacco. Gott, let me give you this opportunity to just say a word to the members, because we've been talking about financial well-being, so that and then you can officially close the Sacco. Meanwhile, I'd like to thank all of you very much for being a part of this webinar, for being very engaging, and thank you for all your questions. We'll pick up some of those things just to be able to assist you on the individual queries and some of the general queries. We've taken note of your feedback and we really appreciate. So Gott, please go ahead and then you can close the webinar.
Thank you, Madam Vice Chair, Dr. Mercy Korir, for giving me the opportunity to give the closing remarks. For those who have joined the KMA Sacco Limited, or those who are yet to join, all I can tell you is the Sacco is deliberately crafted to take care of the doctor right from when you join medical school up to when you probably retire, and you are organizing how to organize your estate for purposes of bequeathing it to your children or your dependents. So the Sacco is deliberately crafted to take care of your financial journey from the time you turn 18 and probably join as a medical school member, all the way, who is a member by introduction, all the way to old age, retirement, and organizing your estate. One very important aspect of this Sacco is that the Sacco is not alien to the doctor. The Sacco is deliberately built by doctors, managed by doctors, and run by doctors to cater for doctor interests. So sometimes, even though there's a lot of friendly fire, even on real Camp PDU, it is positively taken, because today, Dr. Gott is your treasurer, Dr. Koech is our chair, Dr. Mercy Korir is our vice chair, Dr. Yantet Sempele is our secretary. Tomorrow, we shall all vacate, And some of you members who are probably asking tough questions on real KMPDU, we will thrust you into the hot seat, and we shall be bringing the questions from the other end. So it's in our best interest that we come together under the Sacco. We maintain a lot of vigilance, and most importantly, it is us that who have built this Sacco for ourselves. So there is God does not have a bigger stake than the intern who has just joined and is servicing his internship loan. Neither does he have a smaller stake. All of us have a stake in this. So it's important that we craft this house to serve us, not that the house is crafted that we serve the house. No, we build the house in order to serve us and also to ensure its sustainability. There are a lot of comparisons usually with other SACCOs. They are good comparisons, although sometimes some of them are a bit off. Because, for example, I saw a question about Fortis. Fortis is a SACCO somewhere, I think, in Nyeri, if I'm not wrong, in the Mount Kenya region. If you look at the way their members patronize their loans, and you look at the way our members patronize our loans, and if you consider the fact that income from member loans is the principal source of income for the society, you may be comparing oranges and mangoes, because we are looking at SACCOs where their members are patronizing loans in the range of 80% and above. Our loan patronization rate has been at around 30% for probably the last 5 years. It's not that doctors are not borrowing. Our doctors are borrowing, and quite a number of times when you serve in the credit committee like I used to do, it is when they run into problems with the other loans that now they come to the Sacco to bail them out. Not a bad thing, because when everything falls apart outside, everyone eventually remembers home, even the prodigal son. When everything fell apart outside where he had gone, there is only one place they could go. They eventually go home. So we want to turn the corner and turn the page so that we don't behave like the prodigal son. Just come when things are good, so that we craft a financial future for you that is symbiotic and is meant to develop all of us. With those very many remarks, let me thank all our staff members who have been able to put this together. You are all going to get your CPD points. This is a CPD accredited event. Just to wish you a good night, and to wish you all the best as you go to your duty stations to serve fellow Kenyans. Good night, all of you.
Thank you very much. Thank you, everyone. Have a good evening, and God bless you all.